company, at least in the near term. All right then, viewers, it's time now to put the spotlight on IPO-bound MobiKwik that has posted its first full-year profit in FY24, nearly 15 years after the company was founded. In fact, the fintech company has posted profits of 14 crores, over 14 crores on a consolidated basis in FY24. Let's now go across to Upasana Taku, the company's co-founder and CFO, to speak about the road ahead for the company and, of course, the upcoming IPO. Thank you very much, Upasana, for joining us here on ET Now. In our first full profitable year, Upasana, congratulations on that. And of course, that you're managing in an extremely competitive fintech space. What do you think has really worked? And has profitability been recorded across all segments? Take us through that journey of how you've been able to reach this profitability over the past 14, 15 years.
No, actually, I think that we take our situation as, one of the first fintechs to show full year profitability very seriously. And I can tell you that this has not been, an easy endeavor. We have been working towards it for the last 15 years. Incidentally, the company completed 15 years in August itself. And I think the mission of turning profitable also had started, back in 2018, 2019. And I think it is only now that we have been able to achieve it. So it's definitely a very important milestone for us. And I hope that it sets the right precedent for many other fintechs that are behind us. To answer your question on the profitability of all the segments. So as you know, MobiKwik has a large payments business, consumer-facing payments business with more than 150 million users and 4 million merchants in our overall payments business. And our payments business continues to be the bedrock, of our platform. That is how we acquire users and merchants and serve them on a day-to-day basis. So that payments vertical for us, is profitable. And at the same time, last 6-7 years, we have also been focusing on distribution of financial products to our users as well as merchants. And in that business also, we are profitable. So these are the two, verticals of the company. And in both of these verticals, I'm happy to tell you, we are operating profitably, which is why the company has been able to demonstrate 59% growth in the total income, standing at 890 crores for the financial year 24. And at the same time, we have brought down our fixed costs from 50% to 39% as a percentage of revenue. And that has allowed us to turn profitable not only at the EBITDA level, but also at the PAT level.
All right. So let me now ask you about that, much-awaited IPO that everybody is eyeing. Now, last year you had stated that the company is looking at listing on the D Street in a couple of quarters. But how close are we to the timeline now? Is it now imminent?
Yeah, so absolutely. We are very confident in the way that we have, performed in the financial year 24. And in financial year 25 also, we feel confident that we will continue the same growth momentum in all of our businesses, namely payments and distribution of financial services. So we do believe that from a company perspective, we are ready for the capital markets. And with that intention, we had filed our draft red herring prospectus with the Securities and Exchange Board of India in January of 2024. We are also eagerly awaiting for the approval from the regulator. And as soon as we get the approval, we will, work towards, the listing. So it's a wait and watch. And I definitely look forward to a fast track approval.
All right. And of course, all the very best for that approval from the regulator, Upasana. Now, let me come back to the question about profitability. Now, FY24, like I said, has seen full year profitability. But how confident are you of maintaining this momentum, and what will really bolster that?
So 2-3 things. One is that as a digital financial services platform, we continue to scale the platform. Even today, out of the entire India user base, adult population, while the number of people who are banked is about 850 million users, in terms of financial services, is just around 100 million people that are well served. Everybody else is not, served well on all their financial needs, whether it is savings, investments, credit, or even insurance. So, two, three things that will be the key growth drivers. One is continue to scale the platform by acquiring more users and more merchants. And in that, our focus is definitely more on the smaller towns and cities. So tier 2, tier 3 India, which is growing very rapidly, right now from a digital footprint perspective. So one is to scale the platform. Second is to increase the bouquet of financial products available on our platform. So currently, as I just mentioned, we have a very large bouquet of payment products. We have about 3-4 products in the digital credit distribution space. But in all the other financial services, we are, still small. So the intention will be to bring more innovative products that suit our users and the small businesses, in middle India. And lastly and finally, we are a product and tech company. So innovation is always, at the heart of everything that we do. And India being a very well-regulated market, it will be our, aspiration to continue FY25 in building products that are very user-friendly, innovative, while at the same time fully compliant with the regulations of all the applicable licenses.
Right, Upasana, you've touched upon a very important point about regulations in the sector, and I'll come to that question in just a bit. But let me also ask you about your guidance and what your margins will be. What margins are you looking at in terms of, present margins and, of course, future margins and expansion plans? Also, if you could throw some light on average revenue per user that you're seeing at this point.
So in terms of, the margins that we operated, the contribution margin that we have done in FY24 is 43%. And this is better than FY23, where we were at a contribution margin of 40%. So this is across both the businesses of the company. Now, given that payments is a lower revenue margin business, therefore automatically the contribution margin level also, payments will have a slightly lower contribution, maybe in the 20s, versus the financial services business will contribute, in the 40s or higher 40s, which is why the blended number stands at 43%. In terms of FY25, I can't really give you any clear guidance on numbers because we are in the SEBI DRHP process that I just mentioned. But of course, as I told you, we are on a growth trajectory, and we intend to keep the growth momentum that we have generated in FY24 into FY25 as well. Just in the last 2-3 months, MobiKwik has now become, the largest wallet player in India in terms of the transaction value, as per the data available on RBI website. So that is another milestone that we have achieved. We have also launched and are scaling a product called Pocket UPI, whereby all of our users can now use their wallet balance to pay on the entire UPI network by virtue of wallet UPI interoperability. And I think that is also going to be a strong growth driver for us in this coming year. So yeah, I think the idea in FY25 is to maintain strong growth in revenues while at the same time maintaining baseline profitability.
Right, sounds very interesting that you're launching Pocket UPI, and then of course you're looking to focus more and penetrate even further as far as tier 2 and 3 towns and cities are concerned, because this is where the real growth is going to come from. But let me ask you the point that you earlier raised about regulatory tightening. How are you really looking at regulatory policies concerning fintechs? In fact, we were just speaking yesterday to an investor as well, and he states that there is no such impact being seen as far as the fintech sector overall is concerned. What is your view on that, considering that you're also one of the largest players in this sector?
No, absolutely. I think that very recently, I think I read that our governor, Mr. Shaktikant Das, was, as well as RBI, was applauded as being, I think, the second or the third most strongest regulator in the world in some forum. I read it in the newspapers. I think that we have been a regulated company for the last 15 years, and we have multiple licenses from RBI, SEBI, as well as IRDAI. I think the fintech sector has grown exponentially in the last decade. I think we are all witness to that. And so it is but natural now that fintechs like us are serving millions of customers who are entrusting us with their monies. It is but natural that the regulators will step in at the right times and will set more and more boundary conditions or guardrails within which they want all the players to operate. I think that is to be expected. And I think that in terms of being proactive, both from the government and the regulator perspective, I can say that they are fairly industry friendly. They participate in a lot of industry forums. They first take out draft guidelines, and then they take the feedback of the industry. Very recently they've started talking about SROs, or self-regulating organizations as industry bodies, where all the players in the sector can themselves create the rules and then ensure that they are working towards it. So I think all in all, while what we are calling is tightening, but if the sector is growing at a very fast clip, it is but natural that the guardrails will become clearer and clearer. And I think it will always be in the best interest of the consumer from a transparency and policy perspective. So I don't believe that it is detrimental to have well-defined policies or guidelines. I think it is good for the sector, because that will mean that more companies will be built in a more sustainable, with a more sustainable thought process, and can bring long-term value to the entire country, the citizens, as well as the ecosystem.
All right, Upasana. So you are, of course, batting for all of these regulations that are being introduced and that are on the verge of, being introduced. Of course, very, very valid points raised about self-regulatory organizations as well as far as the fintech sector is concerned. And this is a conversation that we'll perhaps have another day. But thank you very much for joining us and sharing your thoughts on MobiKwik's profitability and, of course, the other issues that we just spoke about. Thank you very much once again for being with us.